I think something I'm proud of with the deal was just being creative, right? Like sitting there and saying like, I don't like this deal, right? The like standard purchase of the company, but I'm like just being empathetic to the buyer and saying like, what's something the buyer, is there a deal that I might be willing to do with this buyer? And I think we did a really good job of just being creative there and getting that deal done. And I think it created a lot of extra shareholder value by doing that deal, but we'll see if it did or it didn't, depending on how Zuva comes out. But I think it was kind of, it was a neat deal to do, and we did it by being creative and kind of empathetic to what the buyer was thinking about.
Well, welcome to M&A Science, where leading M&A practitioners share lessons learned from their experience. If you're interested in keeping up with the latest from M&A Science, visit mascience.com and subscribe to our newsletter. Every Monday, we share highlights from our interviews and publications so you can continuously improve your M&A skills. Again, that's mascience.com. I'm your host, Kisan Patel, CEO and founder of M&A Science. Joining me today is Noah Waisberg, recent co-founder and CEO of Kira Systems, current co-founder and CEO of Zuva. Today, we're going to talk about understanding what goes behind the scenes of sell-side M&A. How you doing, Noah?
I am actually on the other side of a cold, so my voice does not normally sound sort of like the Dodge truck man, but here I am.
This is good. We have a special edition of you, slightly medicated.
Yeah, no medication. I feel good. My voice has not caught up to the rest of myself.
Awesome. Hey, could we kick things off with a little bit about your background?
For sure. So I started out my career as a corporate lawyer, mostly doing M&A and private equity stuff, but also some securities at a excellent firm called Weil Gotshal in New York. Really liked that job, but it wasn't what I felt like doing for the rest of my life. At a point, I decided to quit. And sort of summer 2010, I did. And when I quit, I was thinking a lot about the idea that junior corporate lawyers spend vast amounts of time doing work that they hate, that they're not that good at, that's highly repetitive, and that clients don't like paying for, and that's highly expensive. Like back in the day, it was like $350 an hour for the most junior lawyers. Now, well in the 500s or above. And that to me was sort of unfun work when I was a junior, but it also seemed like an opportunity, right? That it just did not seem sustainable that work would continue this way into the future. And so I spent time after I quit just sitting and thinking. And I was thinking about a couple different business ideas, and they seemed like they'd be okay, but not amazing. But then I started thinking about contracts, and I realized in contract review, and I realized that they fit the theory perfectly, that junior corporate lawyers spend huge amounts of time reviewing contracts, like literally 30 to 60% of the legal fees that you get on an M&A deal are due diligence. And most due diligence is contract review, right? So there's like a lot of time spent doing this just in that area. And in fact, it happens in other areas too. So number one, a lot of time spent. Number two, even at the world's best firms, people make mistakes at this work all the time. Number three was realizing that a lot of the time when people are reviewing contracts, they're looking through them for the same things over and over again. And because people were looking through contracts for the same things over and over again, had the idea that you might be able to build software to help people find that stuff and pull it out. So back in January 2011, I got together with my co-founder, Dr. Alexander Hudak. And Alex has a PhD in comp sci from the University of Waterloo, which is like the MIT of Canada. And I'm Canadian, so that's how that came about. And we set to work, and we thought from talking with Alex and other guys with PhDs in comp sci from Waterloo that it would take us 4 months to harness the state of the art in machine learning and apply it to our problem. We thought it would take us 6 months to raise. And so we're like, why don't we just start building and then we can raise afterwards? And so we set to work, and after about 6 months, realized that it was a much trickier technical problem than we realized. And in fact, we weren't sure if it was going to be another 3 months or 10 years to get the software to work. So at that point, we decided we couldn't raise, that no VC was going to give us money to solve a problem that we might fix in the next 10 years. And so we just kept our heads down, kept working. After about 2.5 years, got the software to work, had a second problem, which is no one had ever paid us to use it, and didn't think we could raise on that basis. So just kept pushing, eventually got people to start paying us in 2013. But we were a 4-person company with sporadic revenue in 2014, and then things started to change, and we started getting people signing up, and we went from 4 people to 8 people by the end of 2014. We were up to like 30-ish team members by the end of 2016, and just kept growing over 2017.
What changed? What was that thing that set you in a different direction?
A couple different things. Number one huge one for us was we just, it turned out there was a big 4 firm looking for something very similar to what we were trying to build. And we hadn't even thought of like auditors and consultants as potential markets for this software. Like, we didn't realize that they also did tons of this work. But it turns out that like what we built was very well suited to their work, and they'd looked at a lot of different stuff and kind of came on to us. So that one big contract and their support really helped us in a lot of ways, like financially, but also in terms of just kind of scaling up our software to meet a kind of more enterprise use case.
Like the break.
Yeah, it was a good break. A really great client. Love them. And then beyond that, we started to get like we'd been working, you always hear with law firms that they have like this 9 to 18 month sales cycle. And kind of the corollary to that is like, so you better just get going on it, right? And eventually like places that you've been talking to for years start to come through, and they started to come through. And we spent some of the money we we got from customers on hiring out some sales and marketing people, and they started to connect with customers, and it just started to work in a repeatable way. And so we grew to over 100 people before we took in outside capital for the first time at all. So we raised summer 2018.
No outside capital yet.
No outside capital. First outside raise was 2018, and we were like 100 and not too many.
This is pretty cool for, like, you don't hear many stories of a lawyer and data scientists coming together and starting a company.
Yeah, you know what? It was a really, I think we accomplished a lot of really good stuff together, and especially like almost some of the real fun, not fun in certain ways. Like, we had no customers and there was no prospect of having customers, but like in the early days of just getting to work on the software itself, super great. Like, I learned a ton about machine learning, so much so that I became author of the world's first children's book on machine learning. But I think my co-founder learned a ton about how like legal agreements work, and I think could probably match up pretty well with a big law associate in terms of spotting a change of control or exclusivity clause. So I think we both learned a ton from each other, and it, I think, worked very well.
Awesome.
Anyway, so we raised from Insight in 2018, did sort of a minority round with them for $50 million, which back then was like a pretty big raise. And now it seems like, a quaint little thing that someone with like, $1 million in revenue does. But like once upon a time, I think we were, I think we were the largest legal AI raise at the time, and like actually a pretty big legal tech raise and a pretty big raise for Canada at the time. But obviously, times have changed. Anyways, we took that in and continued to grow. We built Kira to the point where I think 18 of the top 25 M&A law firms were using our tech. So it's pretty good. And not just in the US and Canada, but also like in the UK, I think we had 11 of the top 12 revenue firms in the UK using our software. That's included in that 18 to 25 number, but like really pretty global usage, like best firm in India using our tech.
Wow.
Australian firms using it, Germany, like Denmark, all sorts of places using the tech, parts of all the big four using it. So it's pretty good. We basically realized, though, that we had built a really strong professional services business, but we always thought there was so much extra potential for underlying technology in corporates for them to use the technology themselves. And we were always kind of, I don't know what the right or wrong thing to have done as a business management thing was. Like, we would have been better to have just stuck with professional services and just said, maybe you could use our tech in these other spaces, but we're just going to stick to professional services. But we always felt like there was this great opportunity in corporates as well. And so we tried to do both. And sort of eventually realized that we needed to sort of build new products for these new markets. And we were kind of embarked on that. COVID hit. I had kind of a flat 2020 because of that. Like, I think didn't feel, there were parts about 2020 that I felt good about, like felt really good about how our team handled the event. Like what was definitely a very tough year. Felt really good about how a lot of people handled that. I also felt really good about how we did in terms of market share. Like, even though I don't think we had a great year, I think we had a better year than our competitors. And I think we were sort of lined up to perform pretty well as things recovered. But who knows? But anyways, in the start of 2021, we had some places approach us and just ask if we were interested in sort of joining them. And our reply at the time was like, no, we're not interested. We had kind of a flat 2020. So didn't seem like a sort of, all things being equal, opportune time to hit the market. Number one. Number two, we were in a pretty good capital position. Like, we just had a lot of money in the bank. So we didn't see a big need to do a deal. And number three, we had these two new products that were in development that we felt really good about, but that like we weren't going to get any value out of them on a deal because they weren't generating revenue. We felt good about them, but we didn't think anybody would pay for that. And so we kind of told places that came to us, just like, come back in a year and then maybe we'll be more ready. One of the places, Litera, was like, no, we still, despite all that, like, we still would like to do a deal. And talked to Insight, and Insight's like, you might as well just give them some information and see if they come back with something compelling. And so we did. And so this is like early 21. And gave them some information. And they came back with a number that was like good and fair and like, frankly, life-changing for my co-founder and I. And I think a deal that Insight thought was worth doing for them. But we were sort of disinclined to do the deal. My co-founder and I were. Insight were like, if it were us and we were you, we would do the deal. But for you, you should choose, it's your choice. Do whatever you feel like doing. And my co-founder and I were disinclined to do the deal. And then almost just before we went back to them, I started to reflect on the Litera, the sort of offerer. And I realized that they only really cared about law firm markets. Like, they deeply cared about being like the one vendor to law firms, and that they cared a lot about EBITDA. And I realized that these businesses that really excited my co-founder and I, that we were building, like, we loved the professional services market, but we were also really excited about these corporate businesses, that they were targeting corporates, not law firms. And so Litera might not even feel like them. And they were basically like money pits at the moment, right? Like we were just putting massive amounts of money into developing these products that um, no one was paying us for yet, but we thought people would. But even when people did start to pay us for them, we didn't think it'd be law firms. And so I was like, if I was a CEO of Litera, I would probably shut these products down, and that'll have a lot of cost for them. And so I wonder if Litera would be willing to do a deal where we get a copy of the underlying technology, we get these two separate businesses, we get the appropriate people to run these two separate businesses, and we've been running them fairly separately internally, so it wasn't that complicated to figure out the people side. I wonder if they'd go for that. And so I sort of pitched it over to Insight first, and they were like, that might work actually. And we pitched it over to Litera, and they were actually quite enthused about the business idea, that it sort of had some attractive attributes for them because it would kind of immediately and significantly decrease the burn. And so we did it. It was complicated, but got done.
Yeah, you sold your business, but you essentially carved out these business lines you're incubating and ran off with that.
Yeah. So the end of the day, we were about 180 people in Kira Systems. We took 34 of the people to Zuva. We got left Litera with nearly all the revenue, like probably 95% of the revenue. We took really small little portion. We got a copy of the sort of underlying technology that enables you to find information in contracts, but we left Litera with the specific technology that's used by all the professional service firms, the sort of workflow, project-based contract review tool that gets used on tons of M&A deals. Left them with that and most of the people. And we sort of went off on our merry way, had a transition services agreement that we've now kind of completed most, but not everything of the sort of work to do under, and got the deal done. It was definitely, I think, more complicated to do it that way rather than like a straight sale or something. Like a lot of tricky IP issues that could have kind of sunk the deal, but it got done.
Yeah, there's a lot of lessons learned to unpack with that part, because there's helping them with integration and then carving out your business. You already mentioned TSAs, which people in the industry know get sticky rather quickly. Before I get that, and this, our audience are all practitioners that are striving to be the best. They want to learn from the best, and your perspective is unique. We don't always get it. We typically get
I don't know if I'm the best on this, but
it's a unique
deal.
perspective. I get the corporate buy side, and we always hear that story. So a lot of it's sort of, what are the lessons we can learn in your experience in going through it? And it's also valuable for other folks because it's more of like a one-time event for a lot of founders to have that M&A exit. But I wanted to hear just the front end and get some of the lessons learned there. But if you can give me a sense of who at Litera engaged with you, was it their corp dev team? How'd they reach out? A little sense of that. And
yeah, for sure. So so a word on Litera. So Litera is a HG, good sort of European private equity sponsor, HG backed company that has rolled up a whole lot of legal technology companies. And as I mentioned, I think aspires to be sort of one of the only vendors a law firm chief information officer would need to go to get all the different things that they need. I had known and got along pretty well with their CEO for a bunch of years. So I had like fairly positive awareness of them. I also happen to know their biz dev person pretty well. So I think their biz dev person reached out at the start of the year, but I happen to already have a pretty good relationship with the CEO.
Okay. So then when they reached out, they sort of expressed the interest and had a bit of the, courting nature in terms of, let's have a conversation. And, I'm kind of curious how they brought up the idea of acquiring your business? Was it
Yeah, I
easing
don't think
in with a
it wasn't
partnership
super
or?
subtle, right? Like it was, we'd known each other for a bunch of, like we'd known each other pretty well. And it was like, hey, we'd love to buy you guys. Here's what we think
Cool.
we can, like, we think you guys have fit really well inside of us. You're a company we'd love to buy. Um, you know, here's like indicatively like amounts that we might be willing to pay, like more in like a multiple kind of region. And we knew some of the other, like just from being a CEO in the industry, you tend to be buddies with CEOs of other companies. And so I sort of knew what a fair trading multiple was for companies in our space. And nonetheless, it didn't really. So they were kind of forthright about that interest and potential willingness to pay. Nonetheless, I still wasn't too excited about it. Number one, for those three reasons that I mentioned, like I just didn't think the timing was right for us. And number two, we also had kind of questions about what the transaction consideration would be. Like we did not have a lot of, I personally, like my co-founder, both of us owned like a fair amount of this, like a majority of the stock of Kira. Had interest in rolling perhaps some of our money into Litera, but ultimately, like if we were going to exit, we felt like mostly cash. And so we weren't sure how much that would be on the table, but it turns out that was something that was totally fine by Litera. So, we had some calls with them. With Litera, we also dealt quite a lot with the private equity firm, HG. Had some conversations with the head of corp dev and the CEO, but ended up really doing a lot of the deal as well with a couple of the guys from HG.
And that's for them. That initial pitch to you was, "Here's our deal rationale. Why we think you'd be an interesting company for us to acquire." And they gave you a multiple range, a multiplier range, and where they would transact.
Yeah, basically, like we'd love to do a deal with you. We think we might be able to pay something like this other company got. I knew what that other company got and thought it was okay.
But you were playing hard to get. You were like,
I
"We
wasn't
want
like
to table
playing
this
hard to
for your."
get. Like we
Well,
really like
in that sense, you were. I get it. You weren't in market, so there's no real urgency. You're not driving a process. But for them, I think right now most people on the buy side would say the worst thing to go through is the bank process in this market. Like it is
Yeah, no, I
really,
think
really
actually
competitive.
like the interesting thing about it from their side is like the question I reflected on is if we were going to do this deal, would we have been better off kind of closing out, like once we had the idea of doing the spin out, which is something that had been kind of floating around in our heads for like since probably like 2018. Guide Insight had kind of made a comment in another context, and it had just stuck in my mind. But a super sharp guy, John Rosenbaum, had at one point pointed out that if we were successful in building out a great corporate business, that you'd end up with a problem. Like if Salesforce was our sort of eventual buyer or something like that, and we had a $40 million or a $20 million or whatever revenue legal business, like that would not have value to someone who would buy us for our corporate business. And so we'd have to figure out a way to get rid of that in the context of a deal with a great corporate acquirer.
Huh,
And so
that's
I'd always
interesting.
kind of had that floating around in my head. The thing that I've wondered about is, would we have been better off doing the spin out ourselves and then going to market for the professional services business? Like we could have certainly had a more competitive bidding process. I don't know. I'm
That's the
happy with the
thing.
deal that we did.
That's where it gets interesting. That when we look at M&A, it's either a proprietary transaction, you source and you go through it, which typically you get more time, better considerations, right? If we just look at the fundamentals of making decisions, that you can control the timeline. When you go through an auction process, everything's highly, highly compressed. So be it all this planning that we need for post-close execution of all the integration and value creation activities, which we're going to talk about.
Yeah, like I think for the buyer's perspective, by being really flexible, it enabled them to get a deal done when I can't imagine there could have been too many other companies that could have done that deal. And so it really made, and it was a deal that was pretty appealing to us. Like the financials were fine, right? But I think other people could have paid that amount of money, but I don't think other people could have paid that amount of money. And like, I think we got a fair and solid and like good price. Like I'm not unhappy about the price. I do think it was fair and good, but I think that it certainly enabled Litera to not have to end up in an auction situation by being willing to do a deal that was kind of unique and weird.
And on your end, you look at it as that might have been a viable option to run an auction process.
I think the other way we could have done it, though it would have had significant risks too, is we could have spun out the sort of Zuva business and then run an auction process.
Yeah, stood it up alone.
Like we could have done the spin-off as opposed to like, basically we did the spin-off as part of the deal, but we could have done the spin-off pre the deal and then done a deal. And it would have been a lot simpler. But ultimately, I think like I felt like we did a pretty nice, on the other hand, like I think the deal that we did, even without the spinoff, was, I think, a good and fair deal. It was one like Insight thought it was the right deal to do without the spinoff. And I think the spinoff was a way of kind of creating extra value for
that's what you're
our shareholders out of nothing, really, right? Like if Insight would have done the deal without the spin out, then like the spin out's just like extra kind of found money in a way.
Let's can we get into some lessons learned?
Yeah.
What were just getting up to initial conversations to close? Like what were some of the lessons learned and things you would do different?
Yeah. So again, one thing I definitely think about is whether we should have done the spin out on its own first. I don't know what the right answer is on that. Like I'm happy that we got the deal done at all. Like I think it was kind of a crazy and aggressive deal to try to do the spin out. And I think just getting that done is pretty cool. The spin out did make things more complicated. We spent a fair bit of time, I think it was time well spent, at the term sheet stage, getting the IP around the spin out right. And it was really helpful that we spent that time. Like that was something that kept getting re-raised as we went through the deal, and we were able to like go back to the term sheet and be like, hey guys, like this is what we agreed to. Like this is a deal that can work. Other IP constructs can't work. So like you're doing a spin out, getting the IP right is super important. And I think it's important to get it right, like right at the start when you're doing the term sheet. So it probably took us a little bit longer to negotiate the term sheet, but it was time well spent. So I think that's one lesson learned. We used reps and warranties insurance on this deal. That was kind of like an interesting experience. Like the quirk of it was, as we were going through the deal and like negotiating up to getting the purchase agreement done, I think it made things way easier. Like there were all sorts of things where we probably would have fought for a while if we didn't have insurance, right? Because like it would have gotten some kind of basket, like it would have been a fight over who paid for it. But like in this case, it was just like, you know, as long as you're not lying to us, you're good once this deal's done. And as a seller, that's very attractive, right? Like being able to like take the money and just like be able to live in peace afterwards is like a very nice thing for me, and I think a very nice thing for even our smaller shareholders. But once we got the deal signed up, it I think drove a lot of extra complication where the insurer and the insurers council had like quite a lot of things that they felt like running down that I think a normal acquirer probably wouldn't have cared about.
Wow.
So I would say sort of come out a little bit mixed on reps and warranties insurance, like overall like it, but I do not know that it actually made things simpler.
Yeah, it's interesting. It's interesting how the insurance industry can create another sub industry with products like that.
Well, it's super cool.
Yeah, it's interesting. But yeah, that's the challenge. Do you just stick to holdbacks or use leverage those kind of products?
Yeah, no. It was definitely like as a seller, I found it appealing, but it was not as easy as we initially thought it would be to use. Right, like it felt really good up until signing, and then it got
Is it
trickier.
mainly because of the diligence they do to write the policy?
Yeah, like and basically like exclusions, right? Like
Yeah.
essentially, if they can't answer a question, it gets excluded from the policy. And then, like as a seller, it's not actually your problem, but like you're trying to be a good seller. So
Interesting.
yeah,
Um,
the
anything
TSA was
else?
actually not. There were some hairy bits during the TSA, but I've been shocked with mostly how well it's gone after the fact. Um,
And the TSAs are between what you're carving out and sort of the company that you're selling.
yeah, you got like TSAs going both ways, sort of, but basically, like there were things that so Zuva, the company that we carved out, had 34 people. Kira, we probably had like 40-ish people who were focused on administrative stuff like HR, finance, maybe support, Salesforce administration, like legal, IT, super important things to like talent acquisition, keep the company running. At Zuva, there was like me at the first, like on day one, it was like me, my excellent but part-time EA, and one excellent IT dude, right? Like it just, you kind of, there was like, we had no finance, no HR, no talent acquisition, and we weren't sure how long it was going to take us to fill some of those roles. So one important thing of the TSA was just like, making sure people get paid, like payroll help and getting all sorts of like policies set up and, even just getting employment contracts done with people with a new entity. Figuring out how to get bills paid, figuring out how to get your bank account set up, like expenses reimbursed, like any of that kind of stuff. A lot of TSAs around that kind of support. And that went like exceedingly well, exceedingly quickly. I think we were basically through by maybe mid-November, like from sort of, I think we announced around August 8th or 10th, and the actual split happened September 1st. And so that's like pretty good to be like done with all that transition stuff. We also we came out pretty well with hiring. Like we managed, thanks to help from Kira people, but we were able to hire in some people into some key roles in Zuva. So we were able to kind of hit the ground running, but that TSA support was pretty important. Second type of TSA support is there are some shared customers. And so you got like some rules governing how you help each other serve those customers well. And then the third thing is there's some technological stuff that some of the people, so 34 people weren't administrative. Like the people that came with us generally tended, like 28 or 29 of them were technical product type people. And so some of them had some knowledge and some stuff they were working on that we needed to and continue to need to deliver back to Kira and Litera.
On going back to Litera's side, did you have to help integrate the business with them?
No.
They just gave them the keys and that was it?
Yeah, they took, I think they're number one pretty, like help somewhat, like we help where we can. But I think they're pretty practiced at this. Like Litera, as a company that has bought a lot of companies, has a pretty clear idea how they'd like to do integration.
Usually
They
they
also
bring the
got,
head. Usually they bring the head with them and retain them for a couple of years.
yeah, but like, like, do you like, and that was part of the original talk with them about doing the spin out. Like when you think about what I do, right? Like if you bought Kira and I came with it, like you bought the whole thing at Kira, you'd actually have to figure out like what to do with me, right? Like what would my job be inside Litera? And in a way, when I think about my job at Kira, like large parts of it are kind of like setting strategy and like, managing like or helping manage an executive team or things like that, right? Communicating with your investors, right? Like when you think about like the Fred Wilson formulation of what's a CEO's job, right? It's like set and communicate strategy, make sure, hire and retain the best team, make sure you got enough money in the bank, right? Like if you think about those three functions, and then I did a fourth thing, which was I was fairly involved in some sales and marketing stuff. And in fact, those first three items are stuff that the acquirer is going to do, right? Like,
I agree. I agree.
so like you don't, so if it's just like, you need me to do like 20% to like talk to some customers and stuff like that at various points, like I'm happy to do that. And we came up with a services agreement for me and my co-founder to, be available up to sort of 5 days a month in my case. And I happily do that time when people there need me. Like over the weekend, someone had a question about something they were working on, and like I happily got back to them quickly, right? Like totally happy to see the business succeed and thrive there. But like, I don't know how much you actually like, unless you have some particular role for the founders to do. I'm sort of skeptical how much value they add, like, or how much value
I
I
don't
would add.
know. There's a lot in your brand identity, that sort of came with the brand.
Yeah, but like for them, I don't even know how much of the brand they would like to retain as like an independent thing versus pushing it into a
Yeah, that's
broader
true. That's true
Litera
because
brand, right? Like,
yeah,
in fact, I don't really have inside information on this, but my sense is like what Litera is trying to do is like create this one vendor, right? And so that means there might be like a Kira sub brand within the Litera family, but I think they're really trying to emphasize the Litera brand, right? That like Kira is part of Litera.
yeah.
And in
Hopefully they
fact,
keep it.
having like a co-founder around who has like a relatively strong sort of personal connection with the thing, may not help you in your ability to
Yeah.
create one broader Litera brand. So I don't know that it was crazy to do this kind of deal, and I suspect it sort of solved a bit of a problem for them. Like I don't know if you watch Silicon Valley at all, or but there's like the
I
whole
seen it.
thing. Oh, you really got to
I haven't
watch it.
seen. I don't follow. Hey, I don't follow it religiously. I should
Oh,
probably.
you
But
really should. It's like time exceedingly well spent. Anyways, there's
okay.
like
Okay.
this time when like there's this like rooftop of like one of the kind of like secondary characters, this guy Big Head, who ends up like on the roof drinking like just sitting around with like all the other people that like founders of companies that this like giant Silicon Valley company has acquired. And it's like, I don't know that that really like helps that much. Like if it's like a great thing. And I really sort of admired that HG and Litera were able to kind of say like, we don't need this.
That's pretty cool.
Yeah,
Yeah.
it's cool for me too. Like I'm pretty stoked about getting to
I
do
want to.
Zuva.
I want to. And I'm curious to hear from their end. How did integration go? Did it?
Yeah, totally. Well, I don't know. I think on the integration stuff, I think also like in a way because of the TSA and like the need for so many Kirans to really help Zuva get on its feet. I think that ended up pushing out their integration schedule a little bit.
Hmm.
The other thing
Yeah.
is like we left most of like what do you do as a CEO? Like you're not doing all the stuff on a day-to-day basis, right? And we left behind a really strong executive team who were the ones who actually did a lot of the day-to-day stuff. So I think it was
Yeah.
okay. The other thing that made integration probably a little bit easier is like basically selling to the same customers, right? So like it's not like like Litera has exceedingly strong professional service firm relationships, right? Like I remember there was one CIO who talked to often, and like the CEO of Litera had a weekly phone call with them, right? So it's not like they need me to transition the relationship. Like there are a few things maybe where I have to like do some phone calls for them, but I think they are doing just fine because it's their market.
Yeah, that's interesting. That ends up working out well. It frees you up to jump right and focus on the next thing where you were after to begin with. So it sounds like it came out really well. Those of you still tuned in with us, if you have any questions, my chat's been quiet. I asked folks to put in where they're from, and looks like you got somebody, a neighbor in Toronto too. But has anybody got any questions? Feel free. Otherwise, I'm going to keep bugging Noah for more lessons learned. But I don't know. We got a quiet line. I thought I had even some of my colleagues on here. Oh, they left. But what going back in thinking of other entrepreneurs going through this exit, because it's unique. It's something that there's no playbook prep. Actually, I saw there was a book somebody published. I'm drawing a blank on the name of it. That was actually pretty well written for thinking through an exit as a founder. What are some of your thoughts on that? Advice you would give to somebody that's going to go through that similar transaction?
Um, I think so. I wouldn't necessarily so this.
Being a lawyer helps, maybe. Did you
Well,
go through your own PA agreement?
oh yeah, totally.
Yes.
Like I was reading that stuff very thoroughly. It was a rough summer, um, like very rough summer. But oh yeah, no, I was like going through that. We had good lawyers on it, but like definitely did not do it ourselves. On that, we had sort of McCarthy's representing the company and Osler representing Zuva, so which are both like excellent Canadian law firms. Um, but I definitely spent quite a while reading that stuff. I think something I'm proud of with the deal was just being creative, right? Like sitting there and saying like, I don't like this deal, right? The like standard purchase of the company, but I'm like just being empathetic to the buyer and saying like, what's something the buyer, is there a deal that I might be willing to do with this buyer? And I think we did a really good job of just being creative there and getting that deal done. And I think it created a lot of extra shareholder value by doing that deal, but we'll see if it did or it didn't, depending on how Zuva comes out. But I think it was kind of it was a neat deal to do. And we did it by being creative and kind of empathetic to what the buyer was thinking about. So I'm happy about that. Hold on, I see a question.
Yeah, I can
You'd like
pitch
to
the
read
question
it?
to you.
Your voice is much better than mine, especially right now.
Yeah, I'll save you a few breaths there, but plus our editor will have more to work with. Let's see here. Alexandra says, what sort of strategic operational support did you find helpful as you negotiated terms, navigated the overall process?
Well, we were at a co-founder in the business. He and I spoke heavily about it, as did I with a couple of our execs as we were negotiating. So that kind of group of us, provided really good support to just help think through different angles of the deal. Insight also, like our investor, I think we're pretty used to doing the deal process. And I think we're quite helpful as we thought about it, and also quite helpful about thinking about how like a private equity buyer would look at us. So I think they were very helpful in the deal. I think we had good lawyers and tax help, and I think that was super important as well. So that was our main sort of support network in the process. We didn't use bankers. I think it was such a non-standard deal. So that's where we go back to that conversation we were having a while ago with like, would we have been better to have done the spin out and then gone to market with a process. And I think if we'd done that, we could use bankers. And I don't know that we would have gotten a ton of value out of bankers on this particular deal because it was so weird. And like, it's not like I don't think you could have gone out to market with more people. Like, I don't know that anyone else could have done this specific deal. But if we'd done a more normal deal, I think bankers could have been really helpful in the process.
That makes sense. Anybody else have any questions? I think we're out of questions. We're almost out of time. Thank you for the question. What my signature close question?
How do council structure their fees?
Interesting. How do your councils structure their fees? That's an interesting question. You care to chime in on that?
Yeah. So frustratingly, as someone who's in the legal tech space, I think our fees were unfortunately just boring hourly. Though I will say that our choice of counsel definitely was influenced by firms that we thought were pretty good at leveraging technology, like especially Osler. Bunch of reasons that we chose them to represent Zuva, but it definitely caught our attention how good they were at using Kira. And that was definitely a big plus. But in terms of the fees, I think they just charged us the same way they do most people, which is kind of a suboptimal way to do it, but just hourly.
So I always ask, what's the craziest thing you've seen in M&A? Which I know you haven't done a ton in M&A, but even on this particular transaction, what was the craziest thing you've seen?
I would say just like the transaction itself is crazy, right? Like we did a deal that, we and our investor are sort of financially happy with. We got, the acquirer got something they cared deeply about, right? Like I would say the premier legal AI company and a company with a commanding presence in the professional services market for use on M&A and other contract review projects. So they got something really good. In the meantime, we got a copy of our underlying tech and a fantastic tech team, like most of the people who build the underlying tech. So it came with us and we get to keep rolling. And we got, as sort of part of the deal, we were able to drop an extra 20 million Canadian into Zuva. So we got like great IP, great team to work on it, and enough money to sort of go after it. So I think just as a crazy thing, like it's crazy that we were able to get this deal done. I think it was a total win for both buyer and seller. I think both felt happy about the deal. I think it was good for customers. Like our existing customers ended up with a buyer who cares about them and who they have good relationships with in many cases. And I think I'm optimistic that many of our employees will have good opportunities within Litera, but we'll see how that plays out. But I think just the overall deal itself was kind of crazy, right? Like you don't see many like this, and I think that's kind of cool.
Anything's possible. It is a really creative deal that you got done, and it's interesting because there's likely the other companies in that similar potential to do something, because you typically do that. You solve a problem well, either find an adjacent market or another problem in the same market, and you start building on it. But yeah, you leverage an interesting window of opportunity to sell one line.
Yeah, I think like a takeaway I kind of come away with from this is like you could probably do spinouts a lot more than they get done, right? And the business advantage of being more focused on a narrower set of customers is huge. So I think now that I've done it, like spinout was not easy, but it's totally, I think something I would recommend and could be done more often with some work. So
that's a fair way to look at it.
We'll see, though. The jury is still out on how Zuva will come out. So, maybe it will not have been worth it, but I'm feeling pretty good about it so far.
I like that we're are very adjacent, solving some of the problems. Or do you have use cases with Zuva for M&A?
Yeah. So, well, with Zuva, we got two pieces to Zuva, sort of two product lines. One is out, one is not yet out. So the one that's out is Doc AI. Zuva's Doc AI product enables others to build contract analysis features into their own apps, right? So more target there is other software vendors or system integrators, like places like an Accenture or IBM or Deloitte or one of those kinds of places who build custom software for others. They can take the doc, not to say that any of those places are our customers or anything like that, but just someone like that could take Doc AI and build it into another piece of software and get the kind of best in class contract analysis AI in their own app. So sort of like Stripe or Twilio, but instead of like credit card payments or text messages, it's contract analysis that you can build into another piece of tech.
That's cool.
And so there's definitely, I think, a lot of parts where contracts are super important in the M&A space. And I can certainly imagine other M&A focused vendors finding our software, like the Doc AI software, useful to incorporate into their own apps. And then with the other product that's not out yet, I suspect there could be a corporate focused M&A angle, but let me come back on that as we get it a little bit closer to market.
No, the Doc AI sounds interesting. It's already thinking of use cases with our own product. I'm becoming a huge fan of licensing middleware. We launched this M&A Science Academy last year and essentially built the whole thing off of 4 or 5 licensed products, stacked them together, went to market, and profitable within 6 months.
No, totally. Well, and like you think about like, what do you need to be good at with M&A Science, right? Like, is it building like an actual academy or is it like the content for the academy?
Exactly. We have our deal room product, which we sell to corporates as lifecycle management solution. So the main markets are 1 billion plus market cap corporations and PE backed roll ups. But a lot of the diligence management with multi-party nature of it is there back and forth. Similar to the data room, the workflows are there, but adding that kind of contract analysis. If you're looking at, hey, can I do diligence across a bunch of HR contracts, a bunch of vendor contracts, and sort of pick the unique differences, that would be a perfect use case if you guys do that.
Yeah, like ultimately building it yourself takes a lot of work. That whole bit when we were talking right at the start of the podcast about how we thought it would take us 4 months and instead it took us like 2.5 years. And then we kept working after that for a whole lot of time, like just a lot of expense, a lot of time. And it's really hard to get it working right. We think we can save companies a whole lot of time and uncertainty and just get them to something that works without having to do too much effort.
That's cool.
So, anyways, I think it's pretty good.
Hey, we're past our time. Thanks for the
one
time,
other
Noah.
question if you feel like asking it, but
I got time. I don't think I have a hard stop. Yeah. Let's see here. What do we got? How long did the whole process take in your deal from LOI to closing?
So we sort of had initial conversations probably in January. I think we started doing an LOI in probably May. Probably took us probably about 3 weeks to negotiate the LOI, not like full time on that or anything like that. I think we got it done around the start of June. I think we got the deal signed around the end of July, like later July, like 20th or so. We announced around August 8th and we closed September 1st.
Wow. So that's
not a good summer.
That was a long summer for sure.
Not a good summer, but good use of time.
Yeah. Hey, thanks for doing this. I appreciate
I'm
it.
glad I was on. Sorry again to start a bit late. It turned out it was okay without the fancy headphones, but
Yeah, you're good. You're like me. You get spoiled on the setup, and then you sort of
Yeah, no, no, no,
clinch
totally.
onto it.
Well, yeah, except for my setup's not nearly as good. Like,
I'm gonna come set you up. Give me a little budget. I'll set you up with a good, really
no,
good
no, I'm
setup.
like, yeah, let me move, and then I'm totally gonna like take you up at least on tips.
Awesome. Meanwhile, I'm gonna be poking around the site, learn about more AI tech for our
Yeah, like
industry.
if you need it, it's like it's a lot better than building it yourself.
Oh, I'm a huge fan. We've just got a big deal. We did. I guess we can just say we've got Looker that we licensed and
Oh,
we're
awesome.
implementing in our product. So yeah, no, I'm a big fan of licensing middleware. That's the whole future. Just
Yeah,
don't
no,
build specialize in one little thing, problem solving, and use the other technologies to solve problems better.
yeah,
So I'm excited, man. Maybe this is it. We just keep do some business together, get the little partnership going. Then who knows?
yeah. Let us know if it's the right thing for you. Great. If it's not, great too.
I love Kira. I was a huge fan of what you're doing there. So I'm curious, and that was a big thing. We're just seeing how you guys evolve with the technology because you're absolutely right. To be a domain expert, it takes a lot of resources, a
Yeah,
lot.
it took us like just I don't think we were done either, right? Like software was pretty good, but there was still like lots more stuff we were keeping on working on. And that was like the only thing we really did apart from these like corporate things, which were still like relatively the same thing. Like I just one of the things that's so neat about the spin out is just getting to focus really narrowly, like even more narrowly. And I think it sounds like you're super focused on something narrow. And I think that's a great way to be.
Yeah, it is. It takes time. I think you evolve that way. You sort of start off with this really broad scope, wide lens, and then you learn to laser focus and solve more complex problems, bigger problems, and better outcomes altogether.
Yeah, I think it's like you pretty much got it as like a strategy thing, either go like wide or go like narrow. And I think it's hard to go wide if you don't have like your Microsoft, you can go wide, right? Or even like Litera can go wide. But like for us, first of all, I think we were more like narrow people just by our nature. Like we preferred to do a limited set of things well. Um, number one, but number two, I think if you're not that big, you can kind of be a lot more compelling if you don't do something that's that wide, but you pick something that's like, I think you got to be a bit, as you say, wide at first to figure out what resonates with people. But after you figure out what resonates, you figure out something that resonates, then like do that thing and do it well.
That's a fair point. Yeah, it's this like this the maturity of that startup. You get there, and then you create a bunch of business lines and have a bigger problem to deal
And
with.
then you spin them out.
Yeah, there you go.
Seriously. It's like easier than you might think, though not
Okay,
easy.
I'm
CFO
ready
would kill
for
me
it.
if
I'm
I
gonna
said
reach
that.
back. I'm gonna be like, hey, Noah.
No, 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 do it. It like my CFO would murder me for saying that, but like or my old CFO would was not easy, but you can do it.
Okay, fair enough. Hey, thanks, Ron, for the comment. Glad you
Yeah,
guys
glad
got
if this was useful.
entertained. All right, Noah, we'll talk again soon. I
Cool.
wish you the
Thanks so
best for
much
the
for having me.
holidays and good luck on the move.
You gotta find a place first.
Oh, there you go. We'll get searching. Take care.